What's up, guys, and welcome back to Rougefx. Today we are going over GBPJPY, continuing our series of a stroll through infinity. These vertical brackets are really here just to kind of help you understand where we are as far as the trading week. So this is going to symbolize the start of the trading week as well as the end of the trading week. As you can see, we very much had or carried a very significant bias towards the downside, pretty much meaning that more times than not, I was very much looking to short the market. As you can see, lower highs were very much held, as well as the overall trend of the market was very much holding bearish intentions. Not only that, if I go out to the higher time frame, we can definitely understand the overall, in whichever case, range of the week, right? So the weekly range. What do I mean by that? So as you can see, price very much established a week low, targeted this week high for, in whichever case, establishing a strong high, right? So in whichever case, prices very much did run this slanted high. However, we definitely established, in whichever case, a weak high, retested or retraced, took out internal range liquidity, while doing that, very much rebalancing price off of this imbalanced close price action, continuing towards the highs. It is important to recognize that this, in whichever case, a consequent encouragement. Those who took an early short were very much capped out of the market. Why? Because there's liquidity above here, right? In whichever case, there are buy stops. These buy stops are rated, triggered, and obviously stopped out of the market. And the very much obvious fact that, we did end up taking out liquidity, whether that be slanted highs or, a weak high. We very much took out liquidity, which would insinuate what? A liquidity grab. Okay, cool. So what does that identify this high as? It identifies this high as pretty much a strong high, right? As well as, this weak low down here, confirming our overall bias towards the lows, or at least, I don't want to say confirming, more so of it being a high probability or higher probability to continue towards the lows rather than, continue towards the highs and, of course, hold higher lows. So as you can very much tell, we have our range pretty much marked out with this weak low, strong high. We have our bias already kind of in the back of our mind, really just understanding that in this case, considering the price action, we are looking to short the market rather than long the market, or we are looking for short opportunities rather than long opportunities. Because as you can see, as you can see, our short opportunities did very much hold and our long opportunities very much failed. It's just, just the cause or the product of a bearish market, right? Zooming into the lower time frame, and which in this case would probably be the 5-minute time frame, we are very much going to look for our overall setup to display itself, right? In whichever case, price has established a weak low, right? This low didn't necessarily break a major low, and major low meaning maybe a 3-candle formation, maybe a type of liquidity being an imbalance. Imbalance close price action, maybe in whichever case, price did not necessarily take out a significant low. Instead, it provided a failure to break this low, a failure to, carry on and break any kind of lower prices below there, or maybe this weak low right here. Instead, price very much failed, swung, took out internal range liquidity, being maybe a 3-candle formation, reacting towards a pretty significant rejection block, continuing towards the lows. At that point, I kind of had an idea already of what was actually kind of going on within these markets. As far as, a biased standpoint, price very much did raid liquidity, so that would very much mean that this would be a strong high. We are very much trading GJ, so in this case, we are trading in Asian session. So in whichever case, it's a little bit over 6 p.m. So in whichever case, price gave us our official break of structure, or really kind of breaking this down. As you can see, we have an accumulation, right? Manipulation, distribution pattern, right? So AMD pattern, right? As you can see, we were presented with an accumulation. From here, it was easy to guess what kind of pattern I was, looking for. And what I really did find is, this accumulation very much led to an actual, an official pattern that we very much use within the Roguefx Trading membership program. So in whichever case, this ended up being a bearish M, right? So as you can see, we did have accumulation. We did have a high being established, a failure swing. We ended up rating internal risk liquidity, continuing towards the lows, right? In whichever case, price had no choice but to continue down towards, I guess you could say, if anything, continue the momentum towards the downside. As soon as I noticed price kind of break this, in whichever case, a structural low, right? It's, if anything, a three candle formation being, 1, 2, 3. Price actually broke structure, retested, reached for internal range liquidity, which would happen to be what? Well, if you look very much closely, you can very much tell that we have, in whichever case, a structural high being this bearish rejection block. Price very much reached for internal range liquidity, as well as reaching for our point of interest, right? Which would be what? An unmitigated wick, or, in whichever case, imbalance, or fishnet entry, SNR liquidity. It honestly doesn't matter what you see with first glance, right? As long as you can anticipate its overall price movement, it should be enough. How do we redefine the stop loss? As you can see, we have our strong high, right? But as you can definitely see, this FU candle very much took out liquidity or slanted highs towards the left. That would indicate a strong high. So at that point, we are very much transferring our orders from this protected high to this protected high, right? And as you can see below that, we very much have an unmitigated wick, or in whichever case, unmitigated rejection block, which counts as, in whichever case, a strong high. Now, for two rejection blocks to be right under each, or I should say kind of intersecting on top of each other, that would just indicate an imbalance or imbalance close price action. As you can see, these are very much two very much different candles, and they are, in whichever case, moving momentum two different ways, right? So I just thought it was enough to at least place my stop at least above there, make sure we were very much protected. And for me, honestly, if our point of interest doesn't get violated, that's enough for me to understand that we are within the natural flow of the market, whether that be counter trend or pro trend. In this case, very much pro trend. We are very much triggered in, and at this point, very much loading in our profits. Again, this is Monday of Asian session, so right just around 7 p.m. or in whichever case 1900. We're gonna move on to Tuesday, where we very much attended a early New York session. It was a fairly simple trade to see play out. Honestly, if I'm being very much honest, as you can see, our range is very much established with a weak low, strong high. In this case, this kind of gives us our overall retracement levels, right? Because if we have a range, we have the ability to understand what kind of action is being presented as far as, magnetizing towards a pool of liquidity, right? Which in this case, it would be maybe a three candle formation, or maybe an inducement, or maybe it went above that, or I should say a little bit more above and beyond that, and mitigated this bearish rejection block, right? And I do want to mention one thing. Anything that you see of anyone else's, it is not this, right? If it's not this, then do not combine strategies. It will not work for you, right? Do not compare me to anyone. It just doesn't make sense, right? Because I am not that person. I don't trade that way. We don't have the same routine. So for you to compare me to, or the way I speak or my terminologies to just about anyone outside of this community, it's irrelevant, right? What you've seen in the past or along your journey as a Forex trader or a developing trader, understand that that is a way, a concept, a point of view, a certain perspective. Understand that these terminologies do not just come from one person. These terminologies are there just to think of it as pretty much an easy way to interpret anything, right? What do I mean by that? I mean that when you say a point of interest, you're automatically going to think of an order block, a rejection block, a doji candle, a unmitigated wick. It's just natural. Why? Because speaking the language of the market, speaking in terms that only make sense to a trader. As you can see, this setup very much portrayed a T2 entry. We just very much was provided with a failure swing. I didn't necessarily enter on the FU candle. Instead, I waited for price to very much show his hand. With that, I very much mean that price very much built up liquidity, if not, accumulation, manipulation, distribution. We very much built up slanted highs, right? So in whichever case right here, I entered on the order block that was very much bearish, continuing down towards the lows. That's kind of how I knew that this would be a very much decent trade to kind of hold. So yeah, we just had faith and very much allowed it to do its thing. Price very much rebalanced and continued towards the lows, rebalancing off of this. In whichever case, we very much are presented with an imbalance. How do I say imbalance close price action, or rebalancing off of this unmitigated wick, which is pretty significant. Why? Because price is very much taking out liquidity, failure swing, right? So in whichever case, there was very much an inefficiency within price that price needed to just balance out. Pretty simple. I actually could have taken this trade, but for me, I felt like this one was enough, and for me to very much just go ahead and take this trade, it would be very much risky. As you can see, later on, we were very much, we would have very much been stopped out, and that's the thing. When it comes to experiences, you're going to have to learn how to lose, learn the that's the thing about trading that a lot of people don't understand is you're going to learn how to win and lose. When I say you're building your own personal strategy, I'm not talking about anyone in particular. A lot of someone in the comments was comparing me to ICT, and it's like, bro, I am not ICT. I am not compared. I literally have nothing to do with this person, right? So, in that being said, you are not trying to copy what I'm doing. No, you're trying to develop your own strategy within your own lifestyle, within your own ways of actually going about your life, right? Because this is something you're trying to do for the rest of your life, correct? So, at that point, what is your overall objective or your significance within this industry? To hone your skills, to develop your skills, and to acquire that confidence, acquire that due diligence, right? So basically, really kind of understand yourself at a higher level and really challenge yourself to actually level up in a certain way, right? Level up, transform, right? Really develop yourself at a higher level, because that's what it's going to take within this industry, of course. As you can see, we very much did, however, secure 2.6%. It was a quick scalp trade, I'm not going to lie. It was pretty obvious, though. It was very much pretty obvious. So as you can see, we very much have a weak low, strong high. Price very much took out internal range liquidity from, in whichever case, these slanted highs, and that's where I was very much presented with an optimal trade entry. We target the three candle formation towards the left, as well as an unmitigated wick for, in whichever case, support. And yeah, that would be our 2.6%. Pretty decent close. It wasn't too much, but it was very much enough to kind of like, in whichever case, pay myself for the day, as we are very much holding to trades both from Monday as well as Tuesday. Price retraces, and in whichever case, retest takes out internal range liquidity, being what? Being supply and demand, or maybe smart money, right? Not smart money for real, but a lot of people trade like this for some reason, so they think that horizontal lines or support and resistance is a thing, and it works, which it kind of does. I mean, it does work. All this stuff works, right? Maybe not within the same win rate, or I should say, maybe this particular trade will probably work maybe 10-20% of the time, right? Because most of the time it's being liquidated in order to continue towards the lows, right? So understand that there's definitely not a wrong way to trade. There is a way to trade, and there is a plethora of opportunities in this market that show you what not to do. In order for you to understand what not to do, you have to make those mistakes, you have to lose, you have to endure. Moving on to our next trade, which was very much taken on Wednesday, early New York, right? So maybe like 7 a.m., which is pretty fine, right? For a significant outcome, right? So as you can see, we have a pretty simple accumulative pattern. Price manipulates out of that, retraces towards maybe the 50 or equilibrium. Well, if you very much take your fib and kind of retrace, or in whichever case measure the consolidation, you very much have an equilibrium touch. That is very much what I did. It was not complicated at all. I promise you, this is literally what I did, right? And just understanding the simple fact that above this consolidation was what? An inducement. Above that inducement ended up being a protected high. I was already that much more confident about taking this trade only because we have dang near two candles that very much confirmed our overall bias towards the downside, right? We have a rejection block as well as a doji that actually very much broke our key level. So what was the only thing left to do pretty much? Retest, reach for liquidity, and continue towards the lows. And that is exactly what happened. We were able to obviously hold towards our, in whichever case, we were able to hold a significant amount, well over 16%. Very much grateful, very much. It's a simple trade. This was very much a simple trade. And if you're wondering, yes, we very much had a plethora of opportunity for a stack or a scale in. However, understand that in most cases, one trade is very much enough, right? And then what do? Target 45 to hourly lows, and fairly simple, right? Moving on to our last and final trade of the week. This was on Thursday. However, it was very much around Asian session, so maybe like 6, 7 p.m. It was, again, fairly simple trade, right? Again, just understanding ranges. As you can see, we are very much holding a descending channel, right? So in whichever case, our protected highs are very much that protected. As you can see, we have a weak low, strong high, price retraces, and in whichever case, very much touches a 50 fib level. Yes, most definitely. However, we can very much also understand that price is very much reacting towards this unmitigated bearish rejection block, as well as creating within this POI another QM, right? So what is happening? Price is very much establishing a 3 candle formation and use this indecisive, it looks indecisive. Yeah, very much indecisive candle to liquidate any kind of liquidity towards the left and continue towards the lows. By the time price very much broke our, in whichever case, a structural low towards the downside, we were very much in. Price failed to reach our overall take profit. However, we were very much magnetized towards this weak low. Price retraces or retests, takes out internal range liquidity, which would very much look like, if anything, we have an imbalanced fill. Yes, this was another entry that we could have definitely taken. However, for this to be so close to our original order, I thought it was just best if we just go ahead and hold. We very much did hit take profit though, and closed out almost 4%, which is very much decent. Is very much acceptable as a scalp trade. Closing out our week, we very much ended off the week with a decent percentage. This is how I trade these markets. This is how I look. This is the point of view I carry towards the market within each and every session. It really just takes a lot of practice, a lot of dedication, a lot of hard work. You have to be committed, right? Commit towards not only yourself, but what's your why, right? My why was freedom. I wanted to be free. I wanted to, in whichever case, I didn't want to depend or be dependent on really anyone, but more so a 9 to 5. A lot of people's why turns out to be their families or maybe even themselves, right? Committing to their higher self. This journey of a Forex trader is not for the weak. If you are one who easily gives up or are very emotional, or maybe I don't even want to say emotional, but just can't necessarily control your emotions to the point to where you can respond to anything instead of, reacting. At that point, you're missing your whole entire, or really I should say the biggest lesson of all, right? Because how are you going to learn how to respond to what's happening within the markets if you react to every tick, to every stop loss, to every break even, right? Forex is a long-term investing. It's long-term investing, right? With that being said, it's going to take the time, right? What do I mean by that? Guys, it's going to take well over 2 years to really understand what you're looking at, as well as maybe 2 more years to really master what you're looking at. That's the time frame that you're looking for as a Forex trader to really kind of establish your role within this industry, right? A lot of people quit after a week. A lot more people quit after a month. What differentiates you from the rest? What makes you so special to where you think that this skill set should just come to you within one watch through of every single one of my videos? It took me 4 years to acquire this skill, right? Skill, not profitability, not 100 pips, not 50%. This skill set took well over 4 years to hone this, right? And to really kind of make it mine. And a lot of people are complaining But they're still committed to other mentors. They're still committed to other ways of looking at not only the markets but the world, right? These are all attachments. These are all things that are keeping you stuck, keeping you stagnant, keeping you from obviously growing, right? I'm not saying that you aren't growing. I'm saying that when you are exposed to a higher degree or higher vibrational information, you have to adjust, right? If you don't adjust, you very much will suffer the consequences of being left behind and or being on the short end of the stick, right? Because again, you refuse to adapt, you refuse to change, therefore change is going to happen with or without you. I do appreciate every one of you for tuning in. If you haven't already, hit that like button, subscribe to the channel because we do aim to post consistently, ring that post notification bell, stay updated on all our videos. I am very grateful to be 40, I want to say 40 subscribers away from 1,000 subs. That is very much an amazing milestone I've been hoping and looking forward to achieving. Thank you guys for tuning in. Thank you guys for all the love and support. Until next time on Jody FX, y'all have a good night. And as always, happy trading.